Hello and a very good morning to everyone. So a quick recap of weekend news, overnight news and also trade this morning. So notably over the weekend we did see the German finance minister deny reports that we saw at the back end of last week that Spain had requested a 300 billion euro bailout for the country as a whole. So they had been in talks with the German finance minister, him just denying that report. So a bit of risk aversion on the open. We did see Bund futures open ever so slightly higher. In terms of the cash markets, we've seen outperformance in the periphery, notably Italy, and that's as the Consob, so the market regulator for Italy, they did extend the short selling ban on financials. That was due to expire on Friday, now extended to the 14th of September. Spain's still in place for around 3 months' time. Now, we've also seen the German economy minister warn against large-scale bond buys, and that's in response to the stories we saw on Friday, noting that Draghi and ECB's Weimann, the German representative, had been in talks about bond buying and also a rate cut. With this, we saw a move higher in terms of the Euribor strength, that strength continuing into today's session, and also Euribor 3-month fix falling once again today, and also heading into the ECB rate decision and press conference, which is scheduled for Thursday. So still a lot of speculation and comments emanating regarding the reactivation of the S&P programme as we lead into that. Now, in terms of equity news, we've seen HSBC report. They did miss on expectations, so opened slightly lower. We have also seen some continued downside on some recent comments regarding them. We've also seen some data. We've seen the Spanish GDP reading. That came in line with forecasts to show a contraction of 0.4% for the month-on-month and a contraction of 1% for the year-on-year. We've also seen Eurozone confidence numbers. They have been relatively mixed, so not too much market movement on the back of that. And the Italian 3, 5 and 10-year auctions, they did raise at the top end of the indicative range. However, weaker bid to covers, higher yields as expected, however, due to the increase in borrowing costs we've seen in recent times, and due to the lack of demand, not too much of a drama considering Italy are over 60% through the issuance for this year. Now, to sum up, that's enough from me for the time being. We'll have a video for you a bit later on, but in the meantime, have yourself a very pleasant afternoon.